Hello everybody, welcome to this webinar Forex Trading using Pure Price Action and Logic. It's brought to you by Binary.com and hosted by myself, Theo Patsius. A quick intro about myself. I've been trading for a little over 10 years now, and around 6 years ago I set up SpotFX.com, which I maintain daily. I also have a live room there for daily sessions and weekend webinars. Now, in this webinar, I want to cover quite a lot, really. Binary options versus SpotFX, so everyone really understands the difference there. Price action patterns for high probability trades, the benefits of a disciplined plan and true risk capital, and then I'd also like to demonstrate the Binary.com trading platform. Now, it's quite a lot to cover in a short time. I do have a time limit here. And if you have any questions along the way, there will be question checkpoints. I'm going to answer as much as I can at those checkpoints, and the rest I will answer at the end of the presentation. There's also going to be a bonus from electrofx.com for selected attendees. 5 attendees will be eligible for a bonus after the webinar, and I'm going to choose those 5 based on the most relevant and thoughtful questions. Now, binary options versus SpotFX. The main difference here, the starting difference, is the complication level. Binary options are very, very simple. With SpotFX, you have more software. That means more complication. If any of you here have been trading for a while, you're probably familiar with MetaTrader 4, NinjaTrader, MetaTrader 5, a lot of these common platforms. But essentially, it's a piece of software. You have to download it. You have to learn that program. With binary options, there really is no software. It's built in to your browser with your broker. They always vary a little bit from broker to broker, but they're very, very similar. With SpotFX, you have a stop loss, a take profit, and if your strategy commands it, you also have a trailing stop. These are actions that you need to take, whereas with binary options, there is no trade management to think about. You just enter the trade and the outcome is then determined on a period of time. With SpotFX, the risk that you allocate on every trade can be exceeded. When your stop loss is triggered, you may have some slippage, price may be moving very fast, you'll actually lose a little bit more than you originally planned. Also, when you're entering, you might get some slippage, and that might make your stop loss larger than you planned. With binary options, you have a set risk on every trade. It's never exceeded. You set your risk, and that's it. No matter what happens, that is the amount that you risk. With SpotFX, you have leverage and margin calls to consider. Leverage is quite simple. Every dollar in your account may be equal to $100 on the market, depending on how you set your leverage. And if you aren't smart about things and you trade too big for your account, you may get a margin call. Now, if you're intelligent about this, then you're never going to risk more than 2 or 3% of your account, and that's not going to matter, but it's still a factor. Now, with binary options, there's no leverage or margin calls to consider, because like I say, you're just setting your risk on every trade, and that's that. Now, on SpotFX, we have spreads, swap or rollover to think about if you hold a trade overnight. Also, commissions if you're using an ECN style of broker. So these are extra costs. And when you're trading, you enter a trade, that's one commission. You exit the trade, it's another commission, because it's essentially 2 transactions. If you hold a trade overnight, then you have to pay a swap or rollover, unless it's in your favor, in which case you'll actually gain from that. And then the spread is, dependent pair by pair, and it's also going to add to the risk on each trade being exceeded a little bit. With binary options, there's no spreads, no swap, no rollover, no commissions. You don't have to worry about that. The other 2 points that I've separated here are with SpotFX, the trade can take as much time as it needs. So when you predict where you expect price to go. You predict basically the trade that you're looking to take, the direction, and where you expect that to go. It can take as long as it likes to get there. With binary options, you predict where you expect the trade to go in the direction, and you have a predetermined time to get there. The other point is with SpotFX you have full control over risk reward, and with binary options the risk reward is fixed, so you have no control over that. Now when I think about the advantages of each, and personally I trade both, each has its own place for me, but the top section of points that I just made are really in favor of binary options. Less software, less complication, no trade management, you set your risk, you don't have to worry about it being exceeded, and there's absolutely nothing else to think about, you're just clicking up or down. The advantages to SpotFX, in my opinion, are the trade can take as much time as it needs, and when I'm predicting where I expect price to go, the direction and where I expect it to go, predicting also how long it's going to take, for me that's an extra item. So in my opinion, this is an advantage for SpotFX. Having full control over risk reward, this is also something that you can only do with SpotFX. You can't do it with binary options. So that's sort of 5 against 2 points there. And I want to just touch on risk reward a little bit so that everyone understands what's going on in that element. Now, when you look at this board right here, this is really all you need to worry about when you're thinking about binary options is the section that I've just put the square around, because you cannot exceed 100% payouts. And in fact, binary.com is the only binary platform that I've ever used where you can actually sometimes get 100% payouts. They have a variable payout system. They're always fluctuating, but they generally end up being between 80 and 100%. And I have had sessions where I'm constantly getting 100, 101%, 93%, 98%. It's always in that top category, and for me that's quite important. Just looking at this chart, you can understand why. So when you think about profitability, which is why everybody's doing this, anything really in that 80, 90, or 100% range, in order to be profitable, you really do want to be in that 70% range or higher. Anything else, you can make some money at 60%, but it's almost a waste of time, So you're kind of looking for that 70% or higher win ratio, and that's something you can determine through when you set up your strategy and you test it, you'll be able to determine what kind of win ratio you're getting, but you need it to be 70% or higher to actually make some kind of money off of this. Now when you think about this other section, it only applies to SpotFX because you do have control over the payouts. And I don't want to talk too much about that because this is a binary options webinar, and I just want to, knowledge is power. I want to make sure everyone understands what it is they're doing, why they're doing it, and what their options are for doing it. When you start thinking about 300% payouts, you can see all of a sudden even a 40% win ratio starts to make sense. Okay, but this is not something you can do with binary options. It's the one main advantage, in my opinion, for SpotFX, but like I said before, there's 5 advantages to binary options. So it depends on how you do with technology and how those complications are going to affect you. Okay, so a quick questions check so far. Does everyone understand what I've outlined there? Okay, no questions, it looks like. All right, I'm going to move on to more fun stuff then. I want to talk about price movement and price patterns. There's really no need to overcomplicate this. When I first started out, I obviously looked into the stochastics, the MACD, the Bollinger Bands, all these fabulous indicators that when you first read about them, you think, oh wow, this is the answer, and that's going to be really easy. It turns out that they really are a waste of time, in my opinion, once again. And everything that you need is all inherent within price movement itself. And if anything, when you start looking into these stochastics and MACD and all this, everyone gets obsessed with these overbought, oversold conditions, which essentially turns you into a counter-trend trader. And there's a saying, the trend is your friend. That's there for a reason. So being a counter-trend trader is not the place to start. You can successfully trade counter-trend. There's a way to do that, but it's really not the place to start. So I like to use price movement, and whenever I introduce trading to somebody, I like to start them off with trend following types of trade, where you're following a little bit of a herd, the beginnings of a herd or the continuation of a herd. And price movement is not in 3D. Price moves up, price moves down, price moves sideways, and price moves in waves. It doesn't go back and forth and all this stuff, all right? It's two-dimensional. When price is moving up, it makes higher highs and higher lows. The higher highs and the higher lows define the direction. And price is moving in waves. It doesn't go in a straight line. When price moves down, it's making lower lows and lower highs. The lower lows and the lower highs are defining direction. And price, once again, it's moving in waves. It's not just going in a straight direction. And when price moves sideways, which is the only other real option here, price makes lower highs and higher lows. It forms sort of a triangle pattern, and that's this top example right here. Or price makes higher highs and lower lows, where the market's sort of expanding and gaining strength here in its movements. And price can also make equal highs and lows, which I'll show you in the next slide. But no matter what it's doing when it's moving sideways, it's doing so in waves. Now here's a quick look at the equal highs and lows range movement, sideways movement. Very, very simple. And the next point that I want to get across to everybody is that price movement has layers. Okay, so this two-dimensional price movement is not just happening on one layer. And on any given chart that you look at, you'll be able to see two layers if you look closely enough. Now, for example's sake, let's just say that the black line on this screen here is the waves of movement happening at the 30-minute chart level. And this fast little black line that you can see, the thin one, are the waves of movement that are happening on the 5-minute chart. All right, it's the same movement because that's just the way price moves, but we're looking at it, on these two separate layers. So we're going to revisit this image a little bit later once I've introduced you to this next section. And first, I just want to make sure there's no questions up to this point. This is a basic introduction. I'm just heading into a couple of types of trade, but I want to make sure that everyone understands the way that I'm thinking, the way that I look at this. Okay, so types of trade. When you're reading the market in this way, the types of trade that you can take. There's four really. I've defined it into four. There's nothing else for me. There's confirmed turn trades, continuation trades, breakout trades, and counter trend trades. That summarizes all types of trade that I can possibly take. And the best types of trade for a beginner would be the confirmed turn trades and the trend continuation trades, and that's what I want to focus on in this webinar. The breakout trades and counter trend trades, I'm going to have to save for another time because there's definitely not going to be enough time. The first one we're going to talk about is the confirmed turn trade. And the first version of the confirmed turn trade is a double tap. It's quite a common pattern. Some people call it the double top. Some people, when it's in the opposite direction, it's the double bottom. You've got M patterns, W patterns. There's a number of names for it. I just call it a double tap. And the principle behind the double tap for me is that when you reach an area that you are interested in this case, selling, and we're not going to be talking too much about support resistance either, but if we now pretend that this green line is a 4-hour chart wave of movement, and these brown lines are 15-minute chart waves of movement. Okay, so once your 4-hour chart wave of movement comes up and reaches an area which in historical price had a reaction before, history has a habit of repeating itself. So when we look above and to the left of price, and we see that this particular price point, last time we were here, we actually had a pretty good reaction. So all we want to do now is just confirm that in recent historical price, in immediate historical price, that we're going to maintain that reaction. Now this is actually the counter trend trade, and with the right practice and expertise, you can trade those. But the confirmed turn trade is quite simply waiting for that reconfirmation of the area, and then price comes back and we start reacting again. So it's this wave of movement that I consider a confirmed turn trade. And what you want to do is look for some kind of entry trigger at this point in time. So I imagine that most of you are probably more familiar with candlesticks, for example, indecision candles, pin bars, dojis, engulfing patterns, things like that, yes? Okay, I've got no responses here, but let's just assume that you are, more used to candlestick charts. I myself use price-based charts, but I did once upon a time use candlestick charts. An example of an entry trigger for me would be some kind of pin bar or doji or engulfing pattern at this second retest of the area in recent history. So the confirmed turn to just really be sure that we are heading on down. If we get I'll try and draw one in. Let's say we get a little pattern like so. Oh, that's the wrong one. So let's say you have a spinning top here, for example. You got the first reaction, we saw a wave of movement down. The wave of movement returns to the area, we get the second reaction. As it starts to move down, you have an indecision candle. This would be your trigger point. Now, if you're looking at a 15-minute chart for this brown line wave of movement, then you'd be looking at a 15 to 45-minute binary option. And this would just be your trigger point as you cross your indecision candle. Now, personally, I don't use candlesticks anymore, but this would be an example of an entry trigger mechanism, and that's sort of the last piece of the puzzle here. Okay, now the next pattern, not as common, but it's a similar concept. It's basically the same concept in my mind. Once again, looking above and to the left of price, you're looking for an area in historical price that had a reaction. It's the first time we're coming back there, and we have a new reaction. This is the counter trend trade, and then the pullback is actually not powerful enough to revisit the area. Instead, it's creating for you a lower high, and therefore we're getting this 3-point turn, as I call it. So it's quite simple. That's point 1, that's point 2, that's point 3. So 3-point turn is the same concept to me as a double tap, only we're actually trading the lower high. Once again, you'd just be looking for an indecision candle. Maybe you get a pin bar right here, like so. And so this would be your trigger mechanism. You got the 3-point turn. As price crosses below your indecision candle, that would be your entry trigger mechanism. All right, is everything making sense for everyone so far? And of course, this is the wave that you would want to be taking part in. So if you're looking at a 15-minute chart and these brown waves are representative of a 15-minute chart, then this entry trigger right here would set you up for a 15 to 45-minute binary option. Entirely up to you. I actually like to get into these confirmed turn style trades if I'm using a 15-minute confirmation candle, I just like to trade for the next 15 minutes because I do expect that next candle to be in the direction of my trade, and I don't need to, sit there and think about it, be patient any longer than that. Well, I'm just trying to catch up on some questions here. My entry is just, this is an example because I have a different entry trigger mechanism, which I'll show you guys in a minute. I can quickly explain it. If you were reading wave patterns on a 1-minute chart, for example, then I would just be looking for a double tap or a 3-point turn or something on the 1-minute chart. That would be my confirmation. That would be my trigger point. So if I have my reaction here and I have the pullback and I get the lower high and it starts to turn again, I've got this 3-point turn pattern forming. All I need is confirmation that it is a 3-point turn pattern, and we are most likely that the higher probability is that we are heading, into the lower portion of the 3-point turn. Then perhaps on the 1-minute chart, you would see a 3-point turn or a double tap, and actually the break of the pattern, the break point. This type of pattern is set in stone forever once that low is crossed of this little black 3-point turn. Once the low is crossed, it will never change. It will always be a 3-point turn on that chart. So this is the confirmation point that we are most likely heading into what will be the 15-minute chart 3-point turn. And so that will set you up. That's another type of entry trigger mechanism. The reason I refer to candlesticks is because I think that most people are more familiar with candlestick charting. And everything I'm talking about, of course, you reverse this if you're looking to buy. I'm just showing you examples of a bearish trend like has just been stated here in the text window. Is this pattern valid if the second high is higher than the first? As long as, okay, let's go back over here to the double tap, because what you're talking about is if price came a little bit higher than that one, yeah? Okay. I call it a skewed double tap, and I don't allow too much. Generally, at the scale I'm trying to trade, it's sort of 2 or 3 pips would be the maximum there. But certainly, sometimes there are little stop loss hunts, and it does pop up a few pips and then turn around. As long as it doesn't, go too far, I'm not going to be that concerned. But I definitely prefer it when it's more perfect. Okay, I just call it a skewed double tap. I haven't included that in this presentation. I'm trying to keep things on a time system here. I've got 10 years of knowledge, and there's absolutely no way I can put it into an hour. So I'm just trying to get the basics out here to start with. Okay, so these are the main confirmed turn patterns, the simple ones, double taps and 3-point turns. The next version of the exact same thing, and once again, this is for a sell. We reverse these patterns when we're buying, and when you look at this first pattern, we've got a split double tap. It's actually just a 3-point turn. It's no different. You can see right here, this is a 3-point turn, just like we were looking at in the previous example. But it's now a 3-point turn with a bit of a boost because it's also a split double tap. So we have more reason as to why this lower high is where it is. Okay, head and shoulders pattern. You know, there's a lot of names for things. I keep everything very, very simple. I've got double taps and split double taps, and that really covers all the patterns that I'm really worrying about, and of course 3-point turns. But the head and shoulders pattern is just a 3-point turn with a little bit more confirmation. And another type of split double tap is when the 3-point turn actually fails as a pattern, and then the top is revisited and it reacts again. So you've got a split double tap. Now, if you're trading a binary option and you're using a confirmed an entry trigger pattern, this is probably still a winning trade for you. It didn't, you know, come to fruition and keep going, but as a 3-point turn, the most likelihood is that it was still a successful trade. And then once we come back and we have the split double tap, we get another go at the same price point. You know, we're reacting at exactly the same point, which was this one here, which established itself one more time. And of course it was, remember, in historical price, this area is something. And so once it reacts again, this is the counter trend trade, but we have a reason for why it was a counter trend trade, and now we can use it for the following patterns, which in this case would be a 3-point turn followed by the split double tap. Yeah, now trend continuation patterns just follow through. It's the next trade in the sequence. You know, the first trade in the sequence for me is a confirmed turn setup. All right, so it might be a double tap, might be a split double tap, might be a 3-point turn. As long as it's a price point that was visible in historical price, and you know, this is a supply-demand support resistance concept, which we obviously haven't covered, and it could be covered in another webinar. But you're looking for areas of price basically that they once reacted in the past. We're looking for history to repeat itself. We're using these patterns to just confirm that in immediate history that it is reacting. And so we have these double taps, we have the split double taps, we have the 3-point turns. Once those trades are complete, the next trade in the sequence is going to be the trend continuation. It's going to be the third wave, which is a very safe wave of any trend. And, you know, in this case, we have the double tap. That's that trade right there. And then we have the trend continuation pattern. Over here, we have the 3-point turn, which is this wave. And then we follow it through with a trend continuation. And you can look at these on a 4th and 5th wave, but the third wave is always going to be the safest. And this is actually my favorite trade. It's the most successful, has the highest win ratio. Because you're not trying to pick a turning point. You've actually already had the turning point, and you're just trying to follow it through with an extra burst. Same applies here with the split double taps. You know, we have the confirmed turn scenario happens, and then we're just continuing on with it. You know, we're moving forward into a trend continuation. Over here, we've had our turn, you know, this wave, and then we pull back and we're going for a continuation of it. So these trades are always going to be the best type of trades. They're always going to have the highest win ratios. And now I want to revisit the layer concept again, because whenever you're thinking about a trend continuation or a 3-point turn and you're looking for that higher low in the case of a buy or a lower high in the case of a sell, it's always happening at a location for a reason. The market doesn't just flip about unorganized. It's actually very, very organized. It ends up being your brain that's the least organized, but the market itself is quite organized. When we're looking for a lower high, let's say you're looking for this lower high, the lower high is always going to be at a location that there was some kind of action recently in immediate history. So if you start looking at the layer below the one that you're trying to trade, you'll always find a little area that is the reason for the lower high. All right, and if it's a nice powerful move, you get these beautiful split mirror flip type of locations. All right, so mirror flip is an area that, you know, it once had a reaction, we broke it, we pull back to the other side of it, we go off again. So it's nice and simple, it's nice and tidy. It's not always that tidy, obviously. So when you can't see something like that, if you do look to a layer below the one that you're trading, you will always find the reason for your reaction point, okay? This is my chart, my charting layout, okay, on one of my machines. I have various machines. Depends on my screen resolution as to how I lay things out. It doesn't really matter. But essentially what I always have is an overview of the market. In this case, we've got the weekly chart in the top left corner. And then my map of, you know, what's going on this week. And then I start to scale in. Now, this is quite complicated for a lot of people because it's a lot of layers, and it takes a while to get your head around this style of trading. But for me, this is like reading a book. And once I have my overview of the market and my map, I can then start to pick out these trades. This is a live, I use price-based charting, by the way, as I said before. It's not candlestick charting. It's a little bit beyond the scope of this webinar, but it helps me map out the wave structures a little bit better. Well, a lot better, I would say. And this is just the live market at the end of, I think it wasn't last week, it was probably the week before when I put this presentation together. And if we start off, you know, this is my map. This is what I consider medium term. It's actually quite fast for a lot of people. And this is my really fast chart down here. So these brown waves of movement are basically 15 to 45 minute binary options. And these black waves of movement down here are basically 5 to 15 minute binary options. And that's about the simplest way I can put that for you. Okay, so when you look at the end, this was Friday morning when I finished my trading session. You can see what had happened at that point. Quite clearly, you start to see these patterns. This right here is a 3-point turn. You could use a candlestick pattern to turn it, or you could use this little pattern right here. This could be your trigger point, saying that for the next 15 to 45 minutes, we're going to go in that direction. Then it's followed through by the trend continuation trade. You know, I drew all these patterns out for you nice and tidy, but it is no different in real time. You know, this is how the market moves. There's no other way. It's two-dimensional. So we've got the 3-point turn. You've got the trend continuation. It's a very, very common scenario. Once again, you could use a candlestick to turn it, or I like to use just a new layer to turn that. So this would sort of be the trigger point up top here. And you can just say, all right, we're going to be going this way for 15 to 45 minutes. All right. Down here, you're looking at things in a much faster scale. But once again, you've got the 3-point turn, and then you're trying to look to these little lower ones right here. There's a bit of a skewed double reaction there. So you've got a trigger point right through to what is London Open, because I also look at time-specific times to trade. I also look at volumes, which we can't talk about today. But London Open is an influx of volumes, and you know, in this particular case, we've got the trend continuation movement. You've got the little black pattern trigger that I use. Could be a candlestick, but I choose to use these patterns on, you know, the same patterns on another layer. Yeah, I find it just the simplest way to do things. I don't have to think about anything. I have 3-point turn, double tap, split, double tap, trend continuation in my head, and that's it. I have nothing else to think about, because not only is it my trading pattern, it's my trigger pattern, all right, because I'm reading these extra layers. So in this chart, you know, you're kind of looking at things to go that way for 5 to 15 minutes. And then, of course, you've got the 3-point turn, you know, from the top side when it starts moving down. You've got the 3-point turn, and we've got a little trigger pattern there. So all of a sudden, you're going this way for 5 to 15 minutes. And these patterns just occur all day long. They don't all work out. Nothing all works out with trading. There is no 100% winning strategy. The only thing that you need to worry about is that your winning percentage is where you need it to be based on your risk reward. Okay, quick question check here. No questions from anyone? No, I do not. No. Okay, I want to do a quick run through here about a discipline plan and true risk capital, and then I'm going to take you into the binary.com website and show you how you can take care of this directly from their webpage. When I say discipline plan, I just mean that your plan is so cement that when you're actually trading, you're not sitting there thinking about too much at all. You're just sitting there waiting to react to what it is your plan dictates. And in this case, it would be these. Let's say you start out with, I'm just going to be trading these confirmed turn movements, followed by these trend continuation movements. That would be your plan. And this first section that I've mapped out right here, what needs to happen for you to enter a trade? Why would you consider buying or selling in a particular price area? What would be sufficient evidence that you're not alone? And when will you pull the trigger? So, summarizing that, a confirmed turn set up at an area of support and resistance with a trigger, your choice, candlestick might be, or a lower layer of the same wave movement. That would sort of cover you on that whole section. The only other thing, and this is binary and SpotFX, by the way, the other thing you need to consider is what your position size is going to be, how you're going to manage your account. So what percentage of your account are you going to risk on each trade? Will you consider some trades more probable than others and risk a little more? Perhaps you like these trend continuation patterns more. And through practice, through time and through trading, you will just realize if some setups have a higher win ratio for you or not, and therefore you might want to risk more. Same applies if you have a setup that you're happy to take it, but you notice it has a lower win ratio, then you're going to want to risk less. And these are the sort of things that you need to tweak as you go along based off of your trading results. When it comes to SpotFX, you've got to think about the risk reward, how you're going to deal with that, and how you're going to manage the trade once you're in it, because you have to deal with stop loss, take profit when you move to break even. If you're going to trail the stop, there's a lot more to it, but we're not going to go into that. The main point here is that the money that you do put in your trading account, it has to be something that you can afford to lose. You have to pretend that you've spent that money, because no matter how well you do on a demo, once you start trading live, the trading psychology bit kicks in, and there's fear of loss, greed, there's all sorts of things that you have to overcome. And I don't care who you are, it will happen to you, and it's just different from person to person as to how long it's going to take you to overcome that. I'm just going to check some questions here because I see a little bit here. Oh, I'm glad you asked about the 60-second trades, because that's all I do with binary. I'll get to that in a sec then. Okay, let's go backwards here. I'm going to address if you don't use candles or open, close, high, low, how do you determine a doji? If I go back to my chart here, like I said, I don't use candles. I gave you a candlestick example because I think the majority of people use candlestick charts. I use price-based charts. So, when it comes to especially my SpotFX trading, I don't care about time or candles. And my trigger mechanism is that those same patterns, the 3-point turn, double tap. So in this case, this little tiny black pan, that's my trigger. I imagine if you looked at it on a candlestick chart, it would be something similar to a doji or a pin bar, just because of the nature of the price movement. It's a very, very similar idea, only for me this is easier to read. Okay, when it comes to binary options, because, like I said before, with SpotFX there's risk-reward control, and I can get far greater than 100% returns with SpotFX. So it's silly for me to do binary options on my longer and medium-term trading. Now, when you start trying to trade really fast, unfortunately, SpotFX starts to lose its appeal, because you have the commissions, the spread, the slippage. There's a lot of things that get in the way and make it very, very hard. And what I end up doing personally with binary options, whenever I do trade them, is I trade 30 to 90-second binary options. And really, volumes matter. When you're trading at that speed, volumes matter. And you'll notice on my chart right here, I have just a very simple volume readout. It lets me know the average volumes on the month, the average volumes on the last hour, and the average volumes on the last 20 minutes. So with these three things, they're updated every 5 minutes. I understand if we're running at higher than monthly average, which is necessary, because the monthly average includes slow time, Asian session, and the faster time, London session and US session. So I need to see volumes higher than their monthly average, and then the difference between the hour and the 20-minute will help me understand whether volumes are picking up or volumes are slowing down. Perhaps they're going for lunch break, because we're not moving the markets. Retail traders, we're not. No matter how much you buy or sell, you won't be moving this thing a bit. So we need to be following along with the herd and playing with the people that are actually moving it. So when I think about 30 to 60-second binary options, which is the only thing I deal with for binary options, then I'm really concerned about volumes. I do use tick charts to hone as an entry trigger. I can't pronounce your name, I'm sorry, but I use a 30-second tick chart. You'll find some videos on YouTube of me using 30-second tick charts to do this exact thing that I'm talking about. And what it is it picks up from my SpotFX trading, because what I have on the screen here, everything that I'm doing in this screenshot, I'm doing it on SpotFX. But if I want to start thinking about, this 3-point turn right here, if I want to trade just that, right, just that is a 30-second binary option. All right, that's a 30 to 90-second binary option, depending on the volume level. So we'll just call them 60-second binary options, keep that nice and simple. If I just mark out here 60-second binary options, you've got the 3-point turn, you've got the trend continuation, and then you've got the 3-point turn in the opposite direction. So there's 3 60-second binary options right there. Then we start trading in a bit of a rangy area, so it gets a little risky. The next, substantial trade to attempt is actually this one, which looks like a failed attempt. Once we broke out of this area, essentially, we're looking to trade its own style of 3-point turn, but that one fails. And then we have a 3-point turn in the opposite direction. So that's the next binary option. Then it just takes off, which is confusing, so you do nothing, and then it reacts, and then price comes back, and price reacts again. So this is your next 60-second binary option. We pull back, oh look, trend continuation. Right, this is our next 60-second binary option. We press top side, we pull back, we've got another 3-point turn, there's your next binary option, and then we pull back and we go again, there's the trend continuation pattern. So that's your next 60-second binary option. Now, once again, I need a trigger point. So at this turning point and at this turning point, I need a trigger. And that's what I use a 30-second tick chart for, because a 30-second tick chart will be presented in a candlestick style format. And so I just look for those indecision candles at these turning points of these waves of movement. And I'm picking up from where SpotFX doesn't make any sense, and only binary options make sense. All right, but that's me. I've been doing this for a long time, so it's quite simple for me to understand, and I love instant gratification. I wouldn't say that 60-second binary options are the easiest binary options to do, but there is a way that you can control your own risk-reward destiny on that too, and I'll have to hold another webinar upon request, really. If I get requested, I will hold a webinar about advanced money management with binary options, where you can create your own risk-reward system just through purely your own money management. So let's jump over quickly to the binary options platform. I'm going to share my screen here. Okay, so just let me know if everyone can see the binary options platform right now. Yeah. Okay. So I've logged into a demo account here. I just want to explain one more thing. I love it when everybody's safe. A lot of people lose money in trading. Binary options, SpotFX, doesn't matter. Most people lose money. I mean, I think the statistics are above 90% of people lose. That's really why there's so much money to be had here. And I don't want to see people lose. So as boring as it may seem to you, I always tell people that once you think you've understood a strategy and you've determined, which strategy it is you're going to pursue, you need to make sure that you can do it on the demo, because when you introduce real money, psychology takes over and it messes with you, and you're going to have to overcome that as well. So what you want to do is you want to overcome the trading psychology by itself. You don't want to have to be learning how to trade and overcoming the trading psychology at the same time. You can learn how to trade and you can learn how to have a successful strategy on a demo account with no care in the world, because it's not your money. And once you've proven to yourself, and I've got this particular demo account up, it's just one I set up to test a new strategy. They give you $1,000 to start with. As you can see, I've taken it to 11,000. This is kind of a good place to be, to know that what it is you're doing is working for you. And then you can switch to a real account, a live account, and then you can just tackle the trading psychology by itself as a separate entity, because it is a challenging part all by itself. All right, does that make sense to everybody? Because I think it's important, and I know it's boring for most people, but in my book, why just throw away your money? Because most people lose at this for a reason. It's because they don't have the patience to map out the strategy and become robotic about executing their strategy, so that when it comes to real money, all you've got to worry about is that trading psychology hurdle. So this is the binary.com platform, and when you start trading here, we'll just start trading Forex. Forex is the only thing I bother trading, and the rise fall options are right here on the top. You get an explanation down here. It's quite simple. You have a strike price when you enter, and at the end of your time duration, you want price to be above it. If you select lower, falls, then you have a strike price and you want price to be on the bottom side of that at the end of your time duration. Up top here, you can choose major Forex pairs, minor Forex pairs, or what's called SmartFX. SmartFX is just the indexes of an individual pair, as opposed to being of an individual currency, as opposed to being a currency pair. I'm going to switch to major pairs and just put on my favorite pair that I trade the most, which is euro-dollar. I think it's also the most traded pair, as far as I know. Start time, you can set it in the future or now. I've never used anything other than now, because it's kind of the now that I'm looking for. And the duration or end time, once again, I only ever use duration, and that's depending on the chart that I'm looking at. The payout or stake option if we choose payout and I choose $10, then you can see right here, it's going to cost me $5 and something to get that $10, and you can see the returns over here. Now, like I said before, the returns at binary.com, they do fluctuate, and they're always seeming to be between 80 and 100%. The 100% returns are unheard of when it comes to binary options. This is the only company that I've seen do that. Around major news events, I noticed that they do dip, so just be careful there. Keep your eye on these returns because they're variable, they're not set. If you use stake, then you would put $10 and you're risking 10 to, in this case, get 18.58. So I do like to use stake myself. It's just, this is my risk amount that way. So I know that no matter what, I'm risking the $10 that we've put in here. Whatever value you put in here, that is what you're risking, and that's the maximum that you can lose. The only thing that we don't know is what you're going to gain, and that's going to be fluctuating here, and you just keep your eye on that percentage count right there. There is an in-house charting system, so if you want to just use, maybe you've just got a laptop, you don't have, you know, you're not interested in setting up other trading platforms, charting systems, and they do have these built in. The initial ones right here, the 1 hour and the 6 hours where you start to get candles, right? These first ones are line graphs, okay, so they're very fast. Once you hit the 6 hour, then you've got these 5-minute candles. When you hit the 12 hour, you've got 10-minute candles, the 1 day are 15-minute candles, the 2 day are 30-minute candles, 5 day, 1 hour candles. 1 week are just 1 hour candles, but smaller ones, a lot more compact. Doesn't appear to be loading at the moment. There we go. So same thing, but smaller candles. And so on. So we work into 3 hour candles, 6 hour candles, 12 hour candles, and finally at the end we've got daily candles. So those are your options there. If we just pop back to 5-minute candles here, we can see the market really sideways right now. Volumes are extremely low. It's like I was saying before, the faster you want to trade these binary options, the more volume you need. You know, otherwise it just becomes extra risk that, you know, it's unnecessary risk. So I'm going to switch to, let's put a 30-minute candle on, for example. I certainly don't trade this time of day. We can see here that we actually just had a bit of a continuation pattern, triggered a while ago. We're a bit late, but if let's say I was trading this doji right here, spinning top in fact, this is like that. It's based off of this pattern where we're kind of trying to head to the top, so we've had a bit of a double top against. This is not the best example, but it's all we have. So we're trading into the double top. We would think that maybe we can go that way for one candle. I mean, this is a 30-minute candle, so we'd select 30 minutes. I happen to have 30 minutes in here. 30 minutes, get prices just to confirm that that's what you've got, and set your amount. And then you just purchase that particular option. And once you've purchased an option with binary.com, you can then click View. I'm not sure this is going to work with the webinar software because I believe it's a pop-up, some kind of Java pop-up, so it doesn't look like it's working. But you'll be able to click View and actually monitor your strike price and see whether you're above or below that strike price as you're moving along. So it's a very, very simple platform to use. You've got the in-house charting system to use if you want it. You know, it's a good place to start. If you're brand new to binary options or brand new to trading, then this is a nice, easy way to get started. And binary.com are also one of the I believe it's only 2 companies that I've found that will give you a demo account without making you jump through a bunch of hoops, which is very, very important to me. And you know, there are other binary options companies, obviously, but They want you to email them and ask for a demo account, all this, and they give you a 7-day expiry and a whole bunch of nonsense. You know, this is not, for me. They're not being very honest with you. They're not giving you a chance to learn. They're just wanting you to put money in and jump in the deep end. So I don't respect that, and I very much respect what Binary.com do on that department, along with the fact that you can get 100% returns here. You just can't get 100% returns anywhere else. Yeah, I agree. I don't know if you guys can see the text chat here, but you know, the signals and timing are very accurate and maybe one of the best on the internet. You know, these guys are leaders. So when it comes to binary options, if you're going to trade binary options, you know, this is definitely, in my opinion, in the top 2. So great place for you to start. And like I say, you got the in-house charting. Now, once you get involved and perhaps you demo your strategy, you see good results, you move along, you want to keep going just with this in-house charting because you're actually successful. Because the only thing that matters is your trading results. The only thing that you can make adjustments based off of are your trading results and what you're doing. But what you're doing has to be very systematic. And like I said, in this webinar, we went over the confirmed terms and the trend continuation patterns. You know, these are 2 main simple patterns to follow along with. If you're able to have a 70% or higher win rate on those patterns using just candlestick charts within the Binary.com website, then you know you actually don't need to look any further if that's what you want to do. If you want to add complication, and sometimes adding complication makes things more optimal, you know, that's why I have different types of charting system, different software. I optimize what I'm doing, and I use my results to improve, to make my, you know, profits larger. Okay, so I'm just going to stop this sharing. It looks like that binary option is going quite well, but I can't show you because it won't let me have a look here. I don't think the Java works while I have the screencast going by the looks of it. So I'm not getting the pop-up, we can't monitor it, but that binary option is doing quite well. Okay, so I'd like to wrap up now, just check on questions more than anything else. So, like I said in the beginning, this is a lot of stuff to cover in just an hour, but I wanted to try and get over as much of the basics as I could. And anybody that is interested, just let me know or email binary.com and let them know, and I will prepare for you another webinar or 2, probably 3. There's a lot more to talk about. Okay, well, for now, well, this is the binary options thing. The timing is what binary options are all about. And the only way you're going to get the timing correct is if you use the correct type of entry trigger chart, right? Even these price-based charts, if we look at this price-based chart is really there to replace a certain time frame, and for the most part, you know, you will have an idea just because you set it up. If you know how to set these up, you'll have a good idea as to what time frame this is representing. When it comes to the actual trigger point, you know, I'm looking to trade 60-second binary options as an average. It's basically 30 to 90 seconds for me. But 60-second binary options, if I want to trade 60-second binary options, then I need 60-second candlesticks. And 60-second candlesticks, for me, I prefer tick chart candlesticks based off of the average 60 seconds of movement in the last 20 minutes. And this is something much, much deeper and for another webinar. But, I don't think anyone should start their binary trading career on 60-second binary options. They're quite tricky until you know what you're doing. All of that profit that I showed you in that demo account, for example, from 1,000 to 11,000, that's 60-second binary options, right? So it can be done, but if you don't know what you're doing, you might as well go to the casino. And I don't quite understand this other comment, but yeah, I mean, no more indicators. Indicators do nothing for me. I don't care about some lagging indicator that's telling me something that I will be able to see in price movement itself, because price movement is all that matters. Volumes are all that matters when you want to trade fast, and that's the end of the story. You don't need any squiggly lines anywhere, just these simple patterns. We want confirmed turning around movements, trend continuation movements. And, like I said, there's also breakouts and safe way to do the counter trend, but we'll save that for another time. Okay, if you want to see some live 60-second binary options trading, then just type in SpotFX at YouTube and you'll find a binary options section. I have done some live 60-second binary options trading in there if you're using the tick chart. There might be 30 seconds, I'm not sure, I don't remember. But you'll also hear me sort of commentating as I do it, right? So you kind of, and it's all about these 3-point turns, trend continuations, breakouts. This is just what I'm following along with. Why do I need high volume? Because of the time. If 30 to 60-second binary, it's not a lot of time. If volumes are low, you might barely get a tick or two in 30 to 60 seconds. So what's the point? They become far too risky, and we don't need extra risk. I mean, it's tricky enough, but you don't need to make it harder. So the more volume you get, the more movement you're going to get within that 30 to 60 second period, and the more chance we're going to get going in a certain direction. That's why I love it, though. That's why I love Forex. I love the volatility. That's where the money's in the volatility. The trick is to be able to read the volatility, and that's what I strive to do through this pure price action technique. And I'm not the smartest guy in the world. I'm not the stupidest either, but this for me is common sense trading. And instead of trying to guess oversold, overbought positions, all I'm trying to do is let the money start flowing in a particular direction and join in, take a little piece, get out. If it wants to keep going and have a continuation, then I'll get back in, get out. With binary options, you don't have to worry about getting out, of course, you're just getting in, but I'm talking more about both. Okay, I was asked to keep this to an hour, so we'll wrap up for now. Please send in any email requests to binary.com if you'd like me to hold another webinar. Let me know which topic you'd like. I mean, there's advanced money management to talk about for binary options, where you can control your risk-reward destiny, or we can just expand on the 60-second binary options. Up to you. I'll wait for some feedback. I don't like talking about things that people aren't interested in. Also, we've had quite a lot of nice questions and chatter in here, so I'd like anybody that would like the bonus from ElectroFX that's present right now, just email support@electrofx.com and let me know that you attended this webinar and would like the bonus. I'll send that out to you. And thank you for attending on behalf of binary.com and electrofx.com. And I'll catch you guys. Enjoy the rest of your weekend that's coming up here. And catch you at the next webinar.